Another day, another mortgage hack from someone that just discovered compound interest last week. Just make overpayments and you'll be mortgage free in 10 years. That's not a hack, it's just maths. And it might not even be the right move. Because while everyone's preaching overpayments, no one's telling you why they work or when they might be the wrong call. So here's what's really going on. Your mortgage interest is calculated on your outstanding balance, not what you originally borrowed. So every time you overpay, even by a little, you're reducing that balance, which means less interest gets added next month. That means more of your regular payment goes towards paying off the debt, not feeding the bank. Now over time, this can shave years off your mortgage and thousands in interest, that is true. It's especially powerful early on when you've just taken out the mortgage and most of the payment is actually interest. So yes, in isolation, it works. But here's what the finfluencers never say. Overpaying isn't always the smartest thing to do, especially when inflation is running high. Right now, according to the stats, the RPI rate of inflation is running at 4.4%? So if you're still sat on a mortgage that's 3% or lower, the mortgage you borrowed is cheaper than the rate at which money is losing value. Think of it like this. Inflation means £1 today is worth less next year. Now that's bad for your shopping basket, but it's great for debt. Because your mortgage is fixed in nominal terms, it doesn't rise with inflation. So every year, your debt gets easier to pay in real terms because your wages hopefully rise with inflation while your mortgage reduces. It's a bit like the Bank of England is quietly paying off your mortgage for you. Not in pounds, but in value. Let me give you an example of what I actually mean, because this might make a bit more sense. Let's say you've got a mortgage and it was £200,000, but for example, inflation, we're going to use RPI for this, was running at 5%. That means in a year's time, your debt has been devalued by £10,000, even if you do nothing. So if you've got a cheap fixed rate, it might make more sense to let inflation do some of the heavy lifting and keep your cash flexible. Now, I get it, overpaying feels good. It gives you a sense of control, makes you feel like you're progressing, which you are, but the smart move is sometimes knowing when not to do that. Because life doesn't always go to plan. An extra 10k in your savings account could actually really help if your job goes sideways, or the boiler breaks, or the car needs fixing, or an unexpected young one comes along, who knows? So overpaying your mortgage isn't wrong, but it's not magic and it's not free. So ask yourself, do I want to be debt-free on paper or financially resilient in reality?